I'm going to call this video Mark Cuban Rekt Part 2 because I really want to do an update on what's going on with Iron Finance. We got some news from the team and I want to talk about what happened. It's really unfortunate this has happened because a lot of people made a lot of money and then lost a lot of money, and some people just outright lost. What Iron set out to do in their initial purpose, their initial goal, was really, really good. They weren't the first project to do this, but they put some twist on it. And it had potential. And I think we're going to see more projects whose goal is to create a decentralized stablecoin. And I don't know if it will come from the Iron team or if it will come from someone else. But let's get a couple things out of the way. People are saying, should I buy Iron right now? Absolutely not. Absolutely not. Should I buy Titan for pennies on the dollar from anywhere if you can still buy it? No, do not buy it. There's no current known reason for why it should go up in price. So if you're buying now, you probably have a better shot of going and putting all of your money on red on roulette. So I would not recommend buying either one right now at all. But I think there's some valuable lessons to learn here. And I want to talk about why Mark Cuban would have got into this, because I don't think people realize how incredibly powerful a good decentralized stablecoin is. We don't have a great one yet. The closest one that we have is DAI, and I think there's room for improvement on that. And you've got to appreciate the fact that there's a team out there that attempted to tackle this. Now, there is speculation that the team caused this drop. I don't know that that's been confirmed, so I don't want to unfairly say that. There's speculation that Mark Cuban caused the drop, and I don't know that either, so I don't want to speculate on that. But here's what we know. There was a strong possibility from the beginning, if you understood like the mechanics, there was always a possibility that this might happen. This was possible. This algorithmic stablecoin worked because the community had faith in part that it could work. The moment that everybody thought Iron could not hold its peg or could not regain the peg once it's lost the peg. The moment that everybody thought that, then all of a sudden this project would be totally 100% doomed. It's almost like if everyone woke up tomorrow and thought that their US dollar was losing value every single day and they needed to find something else that wouldn't lose value as fast as the dollar, then all of a sudden the dollar would become worthless and there's no government body that could make it be worth more. If everybody came to that realization at the same time. Some people have already come to that realization, but that's for another video. There are inherent risks to every stable coin that is out there, and most people aren't aware of these risks, and I don't think they get talked about enough. And the reason they don't get talked about is a strange information ecosystem. I've been wanting to talk about this for a while, but it's not the kind of content that people are interested in. And so as a YouTuber, when you spend time making videos that people don't want to watch, it doesn't do good things for your channel. No, when you talk about how to get rich or how you made money, then everybody wants to watch it. Some of the nitty gritty, the important stuff that matters long term gets overlooked. And one of these is stablecoin risk. So I'm going to be covering that in a future video, I promise. So be sure to hit the subscribe button, click that all bell so you'll be able to see that. Now, if you're ready to find out what happened with Iron and what the latest updates are for the team, do me a favor and smash that like button. All right, let's get started. So let's look at a little bit about how Iron worked. Let me pull up the documents. Iron was a partially collateralized stablecoin on the Polygon network and on the Binance Smart Chain. They said right here from the start, they always knew there was a possibility this could not work or it could break. There was always that outlier black swan possibility. Iron token is partially collateralized token, a soft peg to the US dollar. I got several comments on my videos where I mentioned Iron, and they would say, what do you mean when you say it's a soft peg? Or why do you say it's a soft peg? I don't know. They say it basically in the first sentence. It's a soft peg. And that just goes to show how many people don't even take the time to read the basic documentation because they feel like they don't have time. I mean, it's amazing. People will research the latest computer, the latest electronic, the latest video game they're going to buy, but they will not take the time to read the basic documentation on someplace they're going to stick their money. Ladies and gentlemen, if you are a viewer on my channel, I want us to be smarter than that. Part of doing your basic research is just at least understanding what they're doing. If you scroll down here, so there's three types of stable coins that exist. And I'm not gonna read all this, I'll just explain it. There's over collateralized like DAI. They hold $100 in the contract for every $50 that is minted. And it's totally decentralized. There's no individual running it. It's ran by a smart contract on Ethereum. It's a pretty incredible concept and it works really well. DAI did have one time where they lost their peg, but they got it back very, very quickly. But it did lose their peg at one point. We'll be discussing that in another video. If you look at stable coins like USDC, if you look at USDT, BUSD, they're all centralized fiat collateralized stable coins. Now this means theoretically what is supposed to happen, and I say theoretically because this is part of the risk, but theoretically they have $1 in reserve for every $1 of stablecoin that exists. That means it stays $1. The thing about centralized stablecoins, let me ask you a question. If a bunch of people buy a centralized stablecoin, why doesn't it go up in price? Meaning, if a bunch of people all at once go into exchange, there's $1 million in collateral that Coinbase is holding for USDC, but suddenly people want to buy more than 1 million USD coins, that's going to raise the price above $1. At least it should. Why doesn't it? And does USDC, does Coinbase, where do they find the money to keep their coins backed by $1? Think about that. So then there's algorithmic stablecoins. So the idea behind an algorithmic stablecoin is it stays decentralized. Then there's algorithmic stablecoins. The idea behind an algorithmic stablecoin is it stays decentralized and there's no collateralization. So DAI is interesting because you have to put collateral on the smart contract. It requires people to keep putting collateral on the smart contract. But with an algorithmic stablecoin, there's no collateral. The algorithm adjusts in certain ways to help hold the peg. These have not worked well. None of them have actually worked well. And I have experience with these projects. There's always a economic supply and demand that under the right circumstances can throw these off. Iron came along and they attempted to fix this. They were 75% collateralized. So they were under collateralized. So for every iron dollar, there was supposed to be 75 USDC dollars. That was the goal. And then 25% would be their native token, the Titan token. They were trying to create a demand for Titan. And the idea was that when people put their dollars into iron, then they would be able to take those dollars, those USDC, and they would take those and be able to earn a yield on them. Now, I think this could have been part of the problem, just so you know, because I think I wonder, we don't know yet, but I wonder if they were putting their own USDC, if they were using that to put into their own farms to earn Titan tokens and Titan rewards. Because that would be like you taking out a loan, basically, take out another loan to take out another loan. In other words, it would increase leverage on the whole ecosystem. And I wonder if that occurred. I don't know if we know yet. I'm going to be looking into that. I'm going to continue to follow this. So be sure to subscribe to the channel because I'm going to pay attention to this. I want to see what happens because I think there's a lot to learn here. Now, I want to kind of explain the mechanics that made iron actually work because most people don't understand these mechanics, and so therefore they have no idea how it could have went wrong. I mean, it was amazing to me to see people on Telegram saying, how can iron lose its peg? The amount of people that were like, why is iron not at $1? And then asking questions like, you mean iron's not going to go back to $1 after Titan's totally collapsed? I mean, the sheer number of people that had hard-earned money that they worked for, I don't care if it was $10 or $10,000, and they didn't have a clue how it worked. It was sad, but it was kind of like, you say do your own research, and people think that that's like just a CYA move for a YouTuber. No, we have to get better. We have to grow. Ladies and gentlemen, this is incredible technology. It's going to change the world, but we have to understand how it works and why it's going to change the world. And when I say technology in general, I'm talking about cryptocurrency, not just iron. Now, why in the world would Mark Cuban go into this? I want to talk about that, but first I want to go into understanding exactly the mechanics of how iron worked. So one iron, in theory, was made up of 75 cents worth of USDC and 25 cents of the Titan token. The Titan token went up and down in value, and it was important that the Titan token maintain a value. And so the mechanism to help it maintain a value was that the team were supposed to use the reserves, the USDC reserves, and they were supposed to farm them conservatively, you would assume, and create yield for the Titan holders. And the Titan token was supposed to be a governance token that would earn yield that would be created from the investment of the reserves of the USDC. So the idea was it would create not necessarily a big income, but it would create an income for the holders of the ecosystem, and it would help maintain its value. And Titan was supposed to have a limited supply. The team said it had a 1 billion supply, wasn't supposed to get minted infinitely. So there was a mechanism in place that would cause supply to shrink and grow depending on market demands. Let's go back to iron real quick and look at how the ecosystem was supposed to work when it was working properly. So you were supposed to come over here, and if the iron token was selling for more than $1, you could come in here for an easy return, and basically for 75 cents on the dollar and 25 cents on the dollar, you could come in here and mint iron token if it was selling for more than $1. And then you could take those tokens and you could go on any exchange and sell them and make a profit. So it would only cost you $1 in assets, USDC and Titan, or you could even just put in USDC. And you would spend $1 to get iron. If it was selling for 101, you could instantly go to the exchange and you could make a 1% profit. And you could do that over and over as long as it was selling above $1. The other part is where it gets interesting. If iron was selling for less than $1, you could buy it for 99 cents on the open market. You could come over here, you could sell it for $1. Now, whenever you redeemed a Titan that was used to mint that iron was supposed to be burned, and that would decrease the supply. And they actually said this in their documents right here, price stability. The iron token price stability is supported by multiple mechanisms. The main pillar of price stability comes from the possibility of redeeming iron tokens for approximately $1 worth of tokens. Another mechanism to support, meaning it's a peg. You can expect to get $1 worth of tokens. Another mechanism to support the price peg is an arbitrage opportunity offered by minting and redeeming functions, which is what I just explained. If the price of iron token is less than $1, then anyone can purchase it on the open market and redeem it for approximately $1 worth of value when there is a profitable arbitrage opportunity. Again, I just explained that. If the price of iron token is more than $1, then anyone can mint it with the protocol for approximately $1 worth of value and sell it on the open market when there's a profitable arbitrage opportunity. Now, the interesting thing is, a lot of the participants in the iron ecosystem who understood this, there's a chance to kind of play that game. And I actually think that maybe iron could have survived if more people would have understood this. Maybe, just maybe. I mean, there's no proof of that. It's just possible that that could have happened because it would have had more people redeeming, which would have had more iron burning. So let's take a look at what the team has said happened so far. Now, they haven't given a full explanation yet, but the admin said you'll be able to redeem one iron token for approximately 70 cents USD today from 5 p.m. So the redemption fee will be set to 0. Here you can see he's showing the USDC collateral, how much collateral is available in the contract. Here you can see the total iron supply as well. Please do not ask about compensation. We can't tell you anything as of now, and please wait for official statements and follow at Iron Finance. I don't know that they're going to be able to compensate anyone. Where are they going to get? I mean, that was an enormous amount of money. I mean, if they did not do something, if they weren't over leveraged, if they didn't do anything themselves to create the drop, I'm not so certain that we should be asking for our money back. And if possible, I'd love to see the team give it back. But the thing about crypto is everybody loves that it's decentralized until they want a centralized authority to give them their money back. I mean, this is an interesting mechanism, but it really is experimental. The only caveat I'll say on that is if the team did not directly cause this. There's no proof that has happened, so I don't want to say that yet. If we find out the team did cause it, I'll be here and talking about it. If you had Titan LPs or single Titan staking, you may have suffered a complete loss due to the price of Titan going to 0. Please do not ask about compensation yet and wait for an initial statement. We will publish more information in the coming days. Nobody should have been 100% in Titan. Like, it was too volatile. The price was always designed to be, by its design, it was never supposed to go up as much as it was going up. It was a total manic thing was happening. And at some point, if the mechanism was going to start working properly, the price of Titan would have fell anyway by a substantial amount in a relatively short amount of time. The reason this project did not work has nothing to do with Titan dropping. That alone was going to happen at some point. It has more to do with iron broke its peg and couldn't get regained, even while the mechanism that Titan was supposed to provide to help it regain the peg. That's why this whole thing collapsed. Understand, if you were in iron and Titan, there was always a risk that Titan was going to drop 80, 90% or more. That risk was always there. Now it dropped to worthlessness. I knew it was going to drop, but I didn't see that coming. I don't think most people on Titan even understood that a significant drop was always going to be possible. In short, the situation was caused by multiple factors. The price of Titan went down, the 10-minute time-weighted average price. This is where they get in some of the nitty-gritty. The time-weighted average price used for redeeming function simply didn't allow people to redeem iron for anywhere near close to $1 because the price of Titan was going down and the average price couldn't catch up. The time-weighted average price was implemented as a security feature against flash loan attacks, but it didn't work well for large redemptions, and as people tried to redeem more and more iron, a panic spread, and this led to a bank run. So when people were trying to redeem for $1, they couldn't keep up. They couldn't get redemption. They couldn't get that $1 redemption. And it's because there's a time-weighted average price that occurs. And what that does, it looks at the past 10 minutes, what was the average price. That's how the peg is determined. And this was to prevent flash loans. See, this is where decentralization, we haven't figured this out yet. The devs realized flash loans were a problem, exploits were a problem. This has happened on other popular projects. So they tried to compensate. So they created this 10-minute average weighted price. But unfortunately, there was large dumps. Somebody was taking profits. And again, some people say that was the team. I'm going to give them the benefit of the doubt for now because I knew that mania was always going to be a possibility. Now, some people were saying Mark Cuban sold because there was a $200,000 sell. I don't know if Mark Cuban did that $200,000 sell, but whoever did, that could have been what partially caused this to just go down. And when the time-weighted average price was less than $1, the peg was lost. And when people realized, wait a minute, I'm supposed to be able to redeem this for $1 and I can't. And that's what really led to this. The time-weighted average price couldn't handle the big volume of sudden sales. They say here, what I said at the beginning of the video, do not buy Iron, Titan, or D&D, their other token, or any of the D tokens until further notice. They may be trying to figure something out, or they're going to try to figure out how to shut this down. It's going to be interesting to see what the team does. Remove and break all your LPs from Iron Finance and from Diamond Hands as well, or from Adamant if you're over there. Please do not ask if we're going to rebuild or restart. We're going to publish more information officially in the coming days. Thank you for all your support. We really appreciate it. I'm going to continue to follow this to see what happens. Why would Mark Cuban have went into something like this? I want to discuss that. I'm going to save that for another video because I think it's really important that the crypto community understands what he could have seen in this project, because there was a lot of potential here. And there will be, whether it's from the Iron team or any other team, there will be another project. No question about it. There's going to be another project that hopefully makes some improvements, and eventually they can get this idea of a partially collateralized stablecoin figured out, because crypto needs something like that. They just need it to be able to work. Now this, Miss Natoshi, I mentioned this in my last email. Be very careful. People are saying, oh, it looks like an exploit. No. It looks like the mechanism just didn't work. It wasn't necessarily an exploit. It looks like just there was a run on the bank, so to speak, which is what they're saying so far on Telegram. That's exactly what it looked like. I saw Decrypt posted a video. They're like, oh, Mark Cuban got rugged. Well, the end result was the same, but Mark Cuban didn't really get rugged. He got wrecked, maybe. He lost. A rug is insinuating that a development team did something intentionally that caused people to lose their money. So far, we don't know that. And I'm not saying they didn't do it. I'm just saying we don't know that. So I'm not going to say they did until we find out otherwise. And for all we know, Mark Cuban unintentionally could have caused that mania. He, just like anybody else, you wanted to pull your 2,000 out. Well, he wanted to pull his 200,000 out, possibly. But there's no proof of that either. So ladies and gentlemen, cryptocurrency is a wild, wild west ecosystem. I love to talk about the money that can be made. Hell, the name of my channel is Crypto Wealth. But it's not because we're going to get lucky. It's because we're in this space early. It's because most people still don't understand how incredible this technology is. Most people don't realize that we are on the cusp of one of the greatest economic revolutions of our time. Never before in the history of mankind has people been able to take control of their finances without the need of some sort of a central authority, central government, or central bank. This is revolutionary. It is one of the greatest inventions of our time. And we're fortunate to be alive during this moment. But if you take a little bit of time and you just do research and understand this technology, Mark Cuban got rich because he understood the internet early on. And if you watch Mark Cuban, he's still chasing trends because he understands how important it is to understand technology early on. It's why he's in this space. And you got to respect the guy. You literally have to respect a guy who doesn't just tweet about technology. We know for a fact now he's actually gotten down and dirty in this ecosystem. He was here trying to be part of an ecosystem that has an extraordinary purpose. Iron.finance, had it succeeded, would have been an incredible vehicle and an incredible tool that all of crypto needs. And I'll be talking about Mark Cuban in a later video. Ladies and gentlemen, remember, decentralized cryptocurrency equals freedom. This is Crypto Wealth. I'm out.